Welcome to Upside, where we dig into the real stories that live behind the headlines affecting European venture. I don't want any groans from the backseat. We need to talk trade deals. We need to talk tariffs and how these things are going to pay it back to Europe and how they're going to affect us. And I was reading this week about taco tariffs.
Trump always chickens out.
He was sincerely offended by, which made me smile. And I know that they're at time of press now. This is the Friday. This podcast goes out on the Sunday. There were federal judges that were trying to block some of the tariffs, but I read last night that they're not able to, and all tariffs are on the table. There is a EU-US trade deal. The promise of tariffs has cajoled some activity, which we've always said is part of the plan. What does this mean for us as investors? What does this mean for startups, short, medium, long term? Lomax, I know you've got some more scene-setting detail for us, and then maybe you could share your take.
Well, I've been trying to think about what this means for us as early stage investors and startups. So I think that's the key thing here, because I think you get stuck a lot in the geopolitical weeds here. But stepping back, just to set the scene, the US-EU trading relationship is the biggest trading relationship in the world. 1.5 trillion of exports and imports total, which is nearly 3 times or certainly more than twice the US-China trading relationship. So this is a big behemoth of a relationship. Funnily enough, one of the questions I was asking myself is, why we're talking about trade deals now? Why has there never been a trade deal done in the past? I mean, surely this is such a big trading relationship that it would have made sense to have a trade deal in the past. And this has been attempted. 2013 to 2016, there was a big attempt called the Transatlantic Trade and Investment Partnership, which fell over. Of course, this is back on the table now.
Do you know why it fell over, Lomax? Do you know what happened with that?
Yeah, I mean, like our old friend, regulation is one of them, with the EU and the US having such a divergence in the way that they regulate things, whereas the EU tends to have a precautionary principle of banning something until proven safe, where the US is more risk-based of permit unless proven dangerous. So I think you had kind of a different because don't forget, in trade, trade it's not just about tariffs. The more you want to harmonize trade, you can create free trade, but you also want to make it really frictionless, have harmonization of standards, so similar regulatory frameworks, principles. And so the more you can kind of harmonize on that side, the easier it is to do trade. So these kind of deals, that kind of stuff is on the table. So there was a big disagreement there. And there's been a history of sort of subsidy wars, giving subsidies to local champions, and the Airbus Boeing example was a big kind of stumbling block there, where each geography was propping up or supporting their local champion. So this, a deal hasn't been done in the past, but that's no problem, because the tariffs have been relatively low. This is now back on the table because tariffs are up. Now, why is this relevant for startups? Most startups sell software. Roughly 10% of European startups are hardware. So for them, it is relevant, because if we're talking about 50% tariffs on European hardware, then, for example, in my portfolio, the new manufacturing startups that are selling goods into the US will really, really struggle off the back of that. So that's clearly a big thing. So we need to make sure that is kept low for new innovative products. But there is actually a really interesting one where I think this is very important, and it's something we actually haven't discussed on this pod before, is going back to that harmonization of standards piece, that is actually a much bigger deal than I think is made in the tech press. Is that, in the context, take for example, med devices, you have to go through a whole regulatory regime in Europe, then you have to go through a whole other one in the US, right? So if they can actually, or any kind of product that requires a CE mark, like actually, if as part of any broader trade deal, you can get rid of tariffs and or reduce them, etc. But historically, we haven't really had many. But if you can actually harmonize things between the two jurisdictions, then to remove friction to doing business, then that would be an amazing thing. I think there's still massive stumbling blocks in the way for the reasons I've said, in terms of the different way that we approach regulation in the two continents. But that's the kind of thing I'd love to see. Clearly, these meetings are only just going in the diary now, so this is going to take a long, long time. But something should and ideally would be done. Why is this back on the table now? We have the increased threat of China, we have the increased threat of Russia, the reminder that the EU-US trading bloc is massive and important, and so someone should do something about this.
Lomax is obviously right. It's a massive and massively important trading relationship, yet one Trump has thrown into disarray alongside the rest of the global financial and business system. And even with all that chaos, the stock markets are now up 4% since the quote unquote Liberation Day tariff announcements. And so you mentioned the taco trades earlier. I mean, the taco trades was what allowed us for a brief moment in time to buy NVIDIA stock at $95 a share. They're now close to 140, and that's just over, a few weeks. So that's been an incredible trade and one that's made, at least some of us very happy. What will happen longer term here? I think here's the thing. Whatever happens, it seems likely that there will be some residual tariffs. Trump's been talking about tariffs for 40 years. He's not necessarily consistent about many things, but this has seemed to be one of the bedrocks of his political, economical philosophy, if you can call something that comes from him that. And even a 10% de minimis tariff would add between 0.5% and a percentage point to US inflation. And so on top of that, you've got Congress. They're looking to add $3 to $4 trillion of federal deficits over the next 10 years in the kind of this boom, that one,
big,
right?
beautiful budget, baby.
So, and yes, it just squeaked through. It was on 250 to 214 votes in the House. It now waits in the Senate. It's going to go through the process there, and it will come to some version that will go to Trump. They're hoping to get it done before the July 4th recess. So, on one hand, you have at least some residual tariffs looming, no matter what happens with all this, all these negotiations. And you have these fiscal deficits, and that's going to drive inflation. And so I think markets are looking at this and sort of saying, look, this is anything but prudent. We know Elon, again, say about him what you will, but he's kind of left government now, saying that the Doge was an important idea, but, it's really hard to push through the savings that were needed. So the net is US inflation is now down to 2.3%, but it's unlikely to come further down, and interest rates will likely stay higher for longer. And so we talk about, what does that macro really mean for us in startup land? Well, it means a ton of things, because macro drives interest rates, and interest rates drive M&A and financing. And that drives the money we have to invest in companies. It drives the exit environment and liquidity and DPI that are pushed back to investors. This is not really helping anyone in business or tech at the macro level. So what can be done is the question. The UK had, I don't know what you can call it, negotiations. I mean, I think the UK folded fairly quickly, kind of this brave new world of global swashbuckling and global Britain and all that stuff. The UK basically went from a situation where we had 3 to 5% tariffs on US goods, and the US had on average 1.8% tariff on UK goods. And we've now reduced tariffs on the US goods down to about 2.5%. And US has increased tariffs on UK goods up to about 10%. So what a fantastic trade deal that was. Boom.
Awesome.
It's really important that the EU doesn't fall into the same trap. And I think the good news is the EU is probably the most sophisticated trade negotiator in the world, have mapped out exactly down to the constituency level what areas will be most hurt in the Republican Party in the midterms if selective tariffs are slapped on specific US goods. So very, very sophisticated machinery that's been put in place, kind of a little bit sort of the anti-Trump, the anti-chaos. And I think that the EU will probably be able to get to a good outcome because of that. But there will be volatility, and it can be painful short term. Of course, the alternative is just to accept that the bullies and slaps more tariffs on us, and we reduce our tariffs. But I'm not sure that's in our interest either.
For me, there's the direct impact of tariffs and the indirect impact. The direct impact is, do I have a tariff on my product as a startup? If there is a trade deal, if there's harmonization of data standards, will that make doing business across borders easier, etc. Then there's the indirect one, which is the one that Mads, you just so eloquently covered, which is like, well, if tariffs indirectly push inflation, affects interest rates, affects, rotation of assets of capital into equity, into high risk assets away from it, if it rotates money out of it or into it, depending on which way interest rates are going, that all affects the capital that we have and that founders have. So there's sort of this direct and indirect impact, both incredibly important.
Well, public markets have kind of rescued private recently, haven't they? So the fact that our investors and their investors have been able to balance the books a bit more after the recent downturns meant that privates have stayed up. So venture capital has stayed a little bit more buoyant, in which case they wouldn't have done had public markets carried on the trajectory downwards.
There is a seemingly complete schism in financial markets. You have bond yields that have gone up and up, especially US bond yields, right? You now have Treasury kind of 4.6, within striking distance of 5%, which is a lot on a 10-year note. At the same time, you have stock markets back to near record levels, kind of completely having wiped out the tariff crash. And so how can that be? How can bond markets fret and worry and sort of be quite panicking yet, but certainly not in a good place, and stock markets be so seemingly, not only benign, but actually very positive, very optimistic? And I think it's really down to how the two constituents, they look at the world. If you're a bond trader, you get paid not to lose money. And you look at this looming federal deficit, you look at increasing inflation, or at least the risks thereof, and you say, gosh, there's just so much risk in the economy right now. I get paid not to lose money. I'm going to be really cautious about how I deploy. But on the other hand, if you're an equity investor, and that's very much the camp we're in, you look at the world we're in today, you say, gosh, we have all this chaos, confusion, all these threats, but we have AI, the biggest economic transition and transformation in our history, in our lifetime. And so the potential of that is so great that it can outweigh the world's leading economy seemingly on the trajectory to sabotaging itself. And I think it's just really interesting to see how that's unfolding. We talked about NVIDIA is now neck and neck with Microsoft, again, vying for the role as the most valuable company in the world. The AI economy is here, and there will likely be a reset at some point because of the precariousness of the US fiscal position. But medium to long term, the markets are clearly telling us like there is so much potential, very similar to the pattern we saw in 99, 2000.
How much of this is being amplified by people perceiving Trump to be quite reckless and very kind of anti-regulation and will push the barriers for them? How much of this kind of bifurcation is a Trump amplifier effect, do you think?
There was kind of the whole run up to the inauguration, and people were just very, very excited about a frankly more benign environment in which to do business. I think some of that has gone away today. There's just too much chaos. Businesses can't plan. Everybody knows that. But even so, even with all the chaos, even with the fiscal recklessness, even with global trade wars, stock markets are still saying, wow, the prize here is incredible. There's just no way we can be out of this market. So I think it's interesting to observe. And of course, we see that from our vantage point, kind of early stage investing, the companies we're in, the potential is nearly limitless here.
Well, I was going to say, we'd worried that I think a lot of this is both fundamental and there's a huge amount of sentiment that's driving global markets at the moment. For example, the beginning of the year said, well, it's going to take one earnings miss by NVIDIA to reset things and cool things off. And what have we seen yesterday? I mean, NVIDIA smashed it out the park again. So actually,
even without China, right? That was with all
exactly,
the China concerns.
You can talk about bubbles and .com and all this kind of thing, but there are still some pretty compelling fundamentals on the ground. And Mads, bless him, gets incredibly excited about what's going on in AI, as we all should. And there is reason to that. It's what we're seeing on the ground day to day, and what we're seeing with these companies and their numbers. It's real. Clearly the multiples are high and lots of people want to cram into these companies, but these are pretty compelling growth rates.
Well, the EU seems to have woken up. I don't know how much has been charged by.
Has it? Has it? Okay.
Well, yeah. Let me finish and then shoot me in the face. So okay. We've got some plans afoot. We don't know what was in the oven pre the threat of tariffs. Obviously, commerce and trade has always been on the table, but it feels like there's a bit more of an accelerating force to be debated, and by all means, shoot me in the face. So the European Commission has unveiled the EU Startup and Scale-Up Strategy, which is a streamlining of member states' approach to startups and investing. There is a Scale-Up Europe Fund, which is a blended investment vehicle expected to exceed 10 billion euros, and we could talk about where that fits in context. There is to come some regulatory simplification. There is a blue carpet initiative, which is all about attracting talent, simplifying tax rules, and streamlining employee stock options. There's a Lab to Unicorn initiative, which is looking to accelerate the transition from research to market by connecting universities. And there is better infrastructure access in this directive, whatever that means. So I have a whole bunch of challenges with with how the EU is presenting this? Will it move the needle? How can the UK and other non-European countries engage? What does all this really mean? But Mads, do you want to give us some more of the inside scoop as to what's happening with this latest EU kind of strategy thinking?
The EU has put forward, or the Commission specifically has put forward a strategy document, 21 pages, not terribly long. It's got the usual 4 pillars, kind of reduce regulatory burdens and admin, more money, better access to talent, and better access to infrastructure and customers. So sort of the kind of the usual 4 suspects, and not too dissimilar from UK AI policy that we saw unveiled last year. There's some really good initiatives in there. 28th regime, which we've talked about at some length, kind of this idea of creating a new way for European startups to incorporate. So instead of having to incorporate it every single member state, they can incorporate once using 28th regime rules and then operate across the union. There's also this idea of a European business wallet, which is a digital business identity. I think it's a great idea. And we just see how archaic the process of engaging with governments are in various countries, kind of digitizing all of that, making it simple, having a simple digital identity, I think is great. There is the European Innovation Act with regulatory sandboxes, which is something we've experimented a lot with in the UK. We had that around the kind of the whole fintech boom and all this way to have a faster path of access to a regulated market so you can experiment as a startup. So there's an idea to kind of scale that up in various guises across the EU. I think that's great. I think I kind of channeling our inner Jerry Maguires, right? I mean, it's kind of show me the money. And I think, there is this idea, we need more growth capital. We need to be able to do what our friends, the Yanks, are doing with kind of big growth funds that can put billions into cool things. And the timeline that's being talked about right now around the European Innovation Investment Pact and some of the other vehicles that are being discussed are 2026. So some administrations, when they look at this stuff, they get the right people in the room and they announce it and the money's there. Right, we've just seen Trump come back from the Middle East and having a slew of amazing announcements around how both the U.S. would invest in the Middle Eastern region, but also Middle Eastern money investing back into the U.S. I understand why we're not taking a little bit more of an aggressive approach here and moving faster, because frankly, 2026 is light years away.
I thought it was 27, Mads. I thought it was 2 years out. I read that some of these initiatives weren't
so
penned
there
until
you have it,
27.
right? So you're sort of talking about just getting rules into place in 2026, and then money will flow after that. It almost doesn't matter. It's too long. It's too far away. Like, get the right people in the room. We know where the money is, right? If the opportunity is here and we know it is, show the data, talk about the case, and let's get the money into the system so we can start getting to work.
You're a bit more of a cynic on this topic, aren't you?
There are a couple of green shoots in this report that maybe are worth pulling out. So there's the 10 billion or whatever. These numbers are so small. I just like, as a reminder, OpenAI raised 40 billion in its last round, right? So the EU announcing 10 billion of also not even its own money, of like other people's money, private money. It's just like it's a glint in the milkman's eye. However, couple of things that were interesting to me. One is Mads did touch on, which is the talent. What they're planning to do around talent is to try and make it easier for non-EU founders to come to Europe and build companies, and to also hire people for their startups from outside the EU. I think that's clearly great. The US is built on the back of immigration, both like literally and also the startup industry is. We could take a leaf out of their book. Clearly the cynic in me is like, well, the Kikos, the AFD, the Chegas, the Vox, the Farages, the, Fratelli, like whoever they may be in whichever country, are going to kind of really try and shout down those initiatives. But, let's see. I think it's great that they're trying to open the taps on talent. The second one was sort of in the detail, which is around employee stock options. It was great to see the EU recognizing that there is a major issue with the way that employee stock options work in the EU, right? So as a reminder, this is the key way to really incentivize your talent in your company. And we've seen thousands, maybe even millions of engineers in the US become millionaires. The top engineers at NVIDIA all have tens of millions of dollars worth of stock options now. And so, stock options has been a way to attract talent out of traditional industries into startups. And we know in Europe, we have major problems around the fact that each country has different regimes, but more importantly, they have very onerous tax consequences. For example, in some countries, including Portugal, you can get taxed when you get given the option on grant, which is just totally crazy. right? So you're just receiving an option, you're not getting any cash. And then there was like the do you get taxed on exercise? Well, that can happen in some countries. Are you getting taxed as income or capital? Obviously, at different rates. So in the US, it's much more favorable. In the EU, it's not. They recognized it. It's great. They're going to do something about it. The cynic in me is like, well, actually, tax is a national competence within the European Union, which means you're going to need to get every single country to basically align, which is not easy. But I think it's great that they're tackling that. And I think that's absolutely key. It's actually not talked about enough. Can I just say on this 28th regime stuff, which sounds like a kind of Robert Harris novel, that Andreas Klinger, bless him, has been working on. I'm amazed how much this is actually great to watch a kind of founder GP really actually, I don't think he's been working on this for the last like 10, 12 months. He's already got the EU to make pronouncements like this. He's got, members of the European Parliament pushing this stuff through. So this is the push to create a legal entity that is a single standard legal entity that can be used by startups to make it easier to raise money and do business, etc. That is making progress, and that's legal rather than tax. So that is actually a competence of the EU. So that would be great to get it done. Again, the cynic in me is like, did you already know, guys, that there is a concept of a single legal entity? It's called the Societas Europa. Have you heard of that thing?
Never.
That's existed since the beginning of the EU. There are apparently there are 3,000 registered, probably about 2,500 of those are zombies. So you've only got a few hundred. That is, to be fair, for more public companies. But my point is, this concept has existed for larger corporations and hardly anyone's used it. So let's see what the kind of new little brother, little sister, the adoption that it gets. But I think it's a great initiative, and I'm really hats off Andreas on that. But as I said, I'm excited about the potential changes to the employee stock options because that is such a needle mover for hiring and incentivizing talent in companies.
I want to talk about big tech. I want to talk about some of the big announcements. There's been, over the last few weeks, we've had Google's I.O., we've had Microsoft's Build. There have been other large announcements from Anthropic. And I love the VO3 videos have blown my mind. AI mode, I know it's not in Europe yet, but that as a potential ChatGPT challenge, I think is really, really cool. Anthropic's Opus and Sonnet models, could vibe coding actually work? Then I saw also that in the UAE, the government is offering free access to ChatGPT Pro to all citizens. And then that made me think, should Europe be doing something like this? Should AI learning be a compulsory at school? But there's been a plethora of big tech, very impressive announcements. I'm not quite sure where to start. Mads, what would you focus on first? Where would you pick this up?
NVIDIA. We touched briefly on some of the impressive results before. I mean, they delivered 44 billion of revenue in the quarter, just ended 12% on last quarter. I mean, that's a $160 billion company that's growing as fast as a $100 million company. It's just unbelievable. They're neck and neck with Microsoft now for the most valuable company of the world. And that was a super strong quarter, even with China export controls that they said cost $2 to $3 billion in the last quarter. And even when they said that they thought the impact could be as much as 8 billion in the next quarter, the market is still super excited. And we've talked about at a macro level, kind of the longer term story about AI. The shorter term story is, if we go back 6 to 12 months, many people were questioning whether NVIDIA could keep growing. Is there enough workload out there to justify all the processor spend? And what's happened is that AI processing is exploding. Now, Google at Google I.O. revealed that they're processing nearly 500 trillion tokens a month. Now, what is that? Does that mean much? Well, I'll tell you, it's 50 times up on a year ago. So it's a 50-fold increase in the volume transaction of a volume that Google is processing. We don't have similar figures for NVIDIA because they don't process their own transactions. They sell the kit for others to do that. But Google is processing a lot on their own TPUs. And in some sense, they're a sign of what's happening everywhere across the industry and what's getting people so excited about continued NVIDIA sales. Reasoning is a big driver. Agentic workloads are big drivers. For anybody who has not been playing around with the reasoning models yet, I mean, they are just so powerful. And that, I think, takes us directly to maybe the second thing here, which is when we talk about reasoning models, it's hard not to talk about Anthropic and the release of the Opus 4 and Sonnet 4 models. Why two models? Well, Sonnet is the everyday workout horse, whereas Opus is sort of the multi-hour agent that can take on giant code bases and research tasks. Opus 4 is said to be the first model that can fix code bases better than human reviewers. And one test at Rakuten saw the model take on a code base and operate autonomously for 7 hours with no context drift, just fixing code and fixing issues. So it's incredible, right? You take an AI, you unleash it there for a full day of work, and it just goes off and does its thing.
Yeah, you should see the people should look at the benchmarking. I was having a quick look at the benchmarks and the task solving, and the previous set were in the 40s, and these benchmarks are in the 70s and 80s.
Yeah.
It's quite
Dario
incredible.
Amodei, CEO of Anthropic, I mean, he's sort of come out and said, look, it's going to replace a whole lot of work that's being done today because these models are becoming so powerful so quickly. A couple of other interesting tidbits. So it's crossed Anthropic's own safety checks from ASL 2 to ASL 3, meaning that it's at a level now, Opus 4 specifically, where it's so sophisticated that they sort of feel, well, look, we need to provide next level guardrails and checks around the model to make sure it's not used for nefarious purposes. It's by far the most expensive model out there today. Sonnet 4, and that's the cheaper model, kind of the everyday workhorse, it's nearly as good as coding for a fifth of the price. So kind of you have your super duper agentic, send me off for hours at a time Opus model, and then you have kind of the more day-to-day model you can use for everything. Very powerful. They're still text-first models. I mean, they are okay, they are multimodal, but Google and OpenAI still win when it comes to processing images and kind of some of the multimodal work. When it comes to text only, it's really tricky to beat Anthropic. They're very, very strong. So let me keen to hear your reflections on that before we circle back to Europe again.
What was the blackmail thing, Mads? Was it somebody was threatening to not use an Anthropic model, and then the model tried to blackmail the coders?
A safety engineer was threatening to shut it down, and it had then gone through his email and found some signs of some affair he was having, and sort of saying, should I email, talk about Susie over in accounting or whatever it was, before you think about shutting me down. So
my goodness.
Yes, I mean, to some extent, there's a little bit tongue in cheek around some of the stuff, but the models are just becoming really, really good at combining different things. And this is back to reasoning, which has been a sea change in the last 12 months.
The thing that makes me fizz the most is how all this will affect the application layer, and obviously what's going to happen for startups in Europe and the investing world in Europe. So Lomax, where would you take this?
No, I mean, not going to take it in a massive direction, but it's an observation. It's staggering what Mads has just talked us through and what we're reading and seeing with the advances in AI at the big tech level. What does this mean for the application level, but what's for us on the ground, the decisions that we make as investors early stage, at the seed stage, and or growing new businesses? I don't know, I don't know about you guys, but the amount of companies I've seen in the last 12 months that are building something that has just had their lunch completely eaten by one of the big tech companies. It's an evolving, almost day-to-day landscape. I don't remember a period of investment quite so fluid as this in terms of what I'm seeing. We've obviously seen these companies grow incredibly fast out of nowhere, but the risk that they could become obsolete very, very quickly. The shifting sands are, for me, staggering at the moment. And I'd love to hear what you guys are kind of seeing and doing on that, but it's just an observation. Normally, big tech is not so dynamic. Like normally you're kind of the incumbents are kind of slow and releases take ages and whatever. Like the dynamism we're seeing up here, I mean, we're seeing even more dynamism at the lower level, which is what you would expect. But everything feels in a way like both very robust because you're seeing things like very impressive and fast and big numbers, but everything very fragile at the same time.
It'll take some time, I think, to layer down into the application layer, is my take. The other thing that really intrigues me is what this means for tech founders, what this means for founders building product, because you can vibe code, you can spin up products on a weekend, you can spin up features on a weekend. So this velocity and cadence of product release, which therefore will mean, how do we then think about going to market, raising capital, owning market share? So this opens up this whole spectrum of what's going to happen to what was taking months to years to build viable product to go to market to solve X is now taking days and weeks. And will this mean more niche products? Will this mean that we won't get so many monopolistic behemoths? Will we still, will one big monopolistic roll up all of these kind of smaller vibe coded launch things. This is what's going on in my head. So what's happening with technical founders, what's happening on the product side, what's happening with how we're solving problems. Also, what's going to come in-house? Is SaaS dead? Are all these SaaS products going to be brought in-house because non-technical teams within organizations can spin up their own environments and build their own things? So I have no answers to any of your questions, Lomax. I just have more questions.
We talked earlier last year that Klarna laid off a bunch of people to start using, more and more AI in its business. It's now sort of halted. It's rolled back that policy, right? So it's like even that is like, kind of changing.
Well, we're in Jevons paradox territory, aren't we? Could we hire more people to do more because Jevons paradox is in play? I genuinely don't know. It's going to be a fascinating.
One thing I want to ask you guys is this. So we had a guy involved in our investments a few years ago who always used to ask the question every bloody time. Why couldn't Google just build this? And there was
Isn't that the standard VC question? Isn't that what all of us say?
No, but this was on our internal investment committee. So obviously, we'd slightly we at least got past that point, right? but so we had this discussion every single time. Now I look at what these companies are rolling out, and I'm like, well, actually, sometimes I'm sort of, the incumbent risk is more of a worry to me than it ever was. I don't know how you guys think about this, particularly in your software world. I'm obviously investing in slightly funkier hardware companies and biotech companies, but what do you how do you think about that at the moment?
I think you follow the money. I mean, just look at what they're doing. The three most sophisticated AI companies in the world, it's, OpenAI, Anthropic, and Google. Okay, so OpenAI, they've just bought Windsurf for $3 billion. If it was that easy to make software, why would they spend $3 billion? Google has just bought Wiz for $33 billion. If it was that easy to make software, why would they spend $33 billion? I mean, you could hire a lot of Google engineers for 33. I know they're expensive, but so.
Yeah. Well, that was like a third of the cash on their balance sheet.
Vibe coding is amazing at making prototypes, but if you got to do something that's industry grade, you're not going to release a vibe code of that with all the security bugs and issues into the world. And yes, the tools keep getting better and better, but every time we have new tools, we have new problems. I just saw the other day that Google is now saying that cracking the Bitcoin algorithm is a lot closer than everybody thinks because of quantum. And so, that's going to create a whole new slew of problems. I mean, think about having to rewire, cracking Shor's algorithm, right? Yeah. Having to rewire the whole world of cryptography. So there's going to be...
Yeah.
I would have no problem if Bitcoin died. I would have no problem if Trump's meme coin just suddenly got cracked tomorrow and all the wallets were emptied.
I don't think that's going to go away, but I think the point where you're absolutely both right is the level and rate of disruption is just incredible. You really have to stay on top of your game all the time. You have to be super nimble, both move fast and think strategically, which is, I think it's
very different, isn't it?
What makes this so exciting.
We're going to be leaning much more into the commercial and go-to-market aspects. I don't know if you both agree with that, but it feels like founders are going to have to really think about owning market now with these levels of disruption. So that I think is very, very interesting for us as investors.
We're sitting here talking about EU startup acts and kind of our various regulatory initiatives. It's clear that the large US firms are firing on all cylinders. I mean, it's just unbelievable. We've never seen anything like it.
Yeah. I just talked about this frigging EU report, like 10 billion, whatever. It's like, seriously.
It is a little bit, right?
It's just a joke.
At the same time, China is performing extremely well. China now has 4 open source, state-of-the-art, frontier-level AI models. Okay, so where does that come from? And this is with export controls. This is with all the restrictions that have been put up. So the Chinese are absolutely hammering it on AI. And so it's clear that historically in Europe, we've been a little quicker to regulate, not always as quick to innovate. I think Mistral had a good running for it, and they did some nice innovation last year, and they've just been sort of overtaken by the Chinese. So we've got to wake up. I think it's clear that GDPR has caused issues for Europe, and not just for startups. I don't know if you saw the German army. They say they're not able to find their reservists because GDPR prevented them from keeping contact details from former soldiers, so they can't contact people that were previously in the army because they don't know where they are. It's bonkers. AI Act, we've seen that there are talks about watering it down, postponing, delaying. I mean, I think there is a realization that we need to
Amen.
shift gears, but I come back to what I said before. It's the sense of urgency. It's us talking about stuff we should do in 26 or 27. Folks, it's happening right now. So we really need to get our speedos on and get cracking.
And I think like, just I was thinking, like sometimes you can take for granted that the US primacy in various in technology, biotechnology, etc. But actually, like that stuff, they think about this stuff. They think about, the way that we talk about Europe. Like there's a really good piece by Eric Schmidt that he put out in Time magazine this week about biotech, basically saying, look, we used to produce 40% of the world's semis. It's now down to 10, 15%. Like we've lost primacy in that area, right? Okay, the article in his case was around biotech and how the US is at risk of losing its top position there to China. Like they have to constantly fight internally in the US to maintain the position they have. Like, so it's not just something that happens, you take for granted. It needs work and needs initiatives. And like I find like the EU sort of does stuff, but in the wrong, probably focusing on the wrong things. So that was just an interesting thing that I read this week. I mean, I guess what can you say if you're trying to be optimistic about the EU? I mean, TSMC have just announced that they're building the big chip design facility in Munich, so that's great. Europe is obviously woefully similar to those numbers about US, semiconductor manufacturing. And Europe was around 40% in 1990 of global chip manufacturing, is now down to like 5-10%, right? But actually, chip design, obviously we've got ARM Holdings in Europe. Chip design, Europe is not so bad at. It's more like 15-20% of global market, and actually, it's great to see a facility like this. And quoting our friend Hansel from Zoolander, right? Isn't Munich so hot right now? Just generally, Apple have put a big 2 billion research facility there. The Munich Security Conference now is a absolute central part of the global calendar. Seeing Quantum Systems recently raised money. There's a really big. I think there's lots going on in Munich at the moment, which makes it a very, very interesting place. So it was good to see that. If I had to pick out some kind of macro important tech infrastructure news, that was probably it.
The other thing that caught my eye this week, I'm sure it caught yours, was the Johnny Ive Sam Altman love-in. So it's not really.
You watched the video.
I struggled through the video. There was lots of windy walks down San Francisco streets. If you haven't seen it, yeah, I've been trying to understand how it all fits together, what the strategic play is here, and it feels like actually getting to know Sam Altman a little bit through his writing and watching him on YouTube is that there probably isn't much of a strategic play. It's a bit more of an experimentation. OpenAI has bought IO, which is a team of 55 or so people out of Love From, which is Johnny Ive of Apple fame and iPhone and MacBook Pro fame, his design studio for $6.5 billion in pure stock. So no cash, pure stock. So it's quite an unusual thing. It's not the whole of Love From, it's just the team within, the product team within. And they're being very cagey about what hardware they're building. So could it be a pendant or a humane style pin, or is it going to be a phone? Although Sam Altman is very keen to get us away from screens and handsets. So is this going to be a natural next step evolution for foundational teams? Is this really just an experiment? Maz,
There are lots of
what do you think on this
speculation
one?
about form factors and use cases and what exactly this device is going to be. I mean, I'm not good at anything to that, but I do think there is a sign that Sam Altman, he's thinking beyond the models themselves. And if we think sort of models to applications, which we've talked about a lot, to hardware with built-in applications, then I think it's potentially a bet that the form factor or the form factors that we've seen, right? We had the form factor of the 90s and the 90s, which was the PC, and that was the Microsoft era. And then we've had the form factor of the last 15 years, which was the phone. So that was sort of the Apple and to some extent Google era, and that they could make way for the next form factor. And I think Sam, he wants to take Apple head on and he wants to build $1 trillion company. And I think this is part of that strategy. So you're saying he might not know exactly what the device is or should be, or whether it's a real thing yet or an experiment. But I certainly think that the idea here is to dethrone Apple as a $1 trillion company.
Seeing Tim Cook as an accountant running Apple has been extremely distressing with Apple Vision Pro nonsense and more and more derivative models of iPhone, it's like maybe they're creating their own space in the market. Lomax, what do you reckon?
I think I don't have a lot to add on as Permat said, the form factor discussion, but it has made me reflect this. So it's an interesting tie up, and I'm interested to see what they come out with. I'm sure it'll be both beautifully designed and highly functional. It has sort of made me think, because I've been quite blinkered, I have to say, in terms of assuming that the form factor would be the glass to the potential contact lens, kind of going down. I was maybe very one channel on that aspect, thinking we go from the Meta Ray-Ban glasses. Actually Google have just announced rebooting the Google Glass from 10 years ago. I'd sort of assumed we had
I've
this sort
still
of
got mine in
fusion.
my drawer here. I've got my original Google Glass in my bottom drawer.
I basically assumed that we would have this fusion of AR, or mixed reality, should I say, mixed reality and AI, and you would have kind of one device and it would be glasses, and you'd walk down the street and you could talk to it. Obviously, we had Humane and this Rabbit R1 device, but that both flunked. But it's very interesting to see OpenAI go in this direction, and so we'll see. I still
I
think
hope it's not a pendant. Jesus, I hope it's not a pendant.
I still think mixed reality as a category is going to be a big thing. But actually,
Do you?
now I'm looking at this, like there is a world in which it could be bypassed, and the device is something different. Otherwise, I think the video was a bit nauseating. Great to see as an Englishman, great to see a Brit who's, obviously done amazing things since leaving these shores. And at the same time as Steve Hilton now, who's another Brit who's now running for governor of California, right? So the Brits in
Really?
California are, doing wonderful things.
I'm not with you on the glasses front. I think anything that is between human interaction, I can't see being more than a utility. I don't see it being the next form factor. Although I can see a space
but that
for
was my
it,
point. That was my point, Dan. I said I still think mixed reality will be a big category, but I'm not saying it may not be the thing as ubiquitous as the iPhone, for example. And it may be another form factor.
What's happening with you, fine gentlemen, this week? I have lunch with Ekaterina Zaryeva, who's the Startup Research and Innovation Commissioner from the EU. She's coming to the UK next week, so I'll be out for lunch with her, which will be interesting. What's happening with you, Lomax? What's on your agenda?
Well, look, the weather out here in Lisbon is stunning at the moment. The builder has now done our office. The painting has been finished. We're in, yeah, we're in. The meeting rooms are done. We haven't got showers yet, but I've now been surfing quick 40-minute sessions in my lunch breaks twice this week. So like, this is a great place to come and work. So
love it.
you
I'll
guys,
be down.
please come. It's looking awesome. And last night we actually hosted a dinner for founders who have exited their company for more than 100 million in Lisbon, of which there are actually quite a few. So we had a really, really nice private dinner. So it was a really, really interesting discussion. One thing I've noticed about Lisbon, actually, it's a bit of a hub for exited founders, which makes sense. You exit your company, come and live in a nice place, so there's more and more people coming here, which is interesting. And can I do my deal of the week?
Do it. Go for it.
So this is actually a massive one, I think. We talk about unicorns and whatever, but an Irish company called Bright Flag has sold for 425 million. Which is an amazing exit. They only raised 35 million, so the cap table probably was relatively clean. Raised Series B, seed round in I think 2016, backed by our friends at Frontline. So a huge, congrats to them. And it's an all cash deal. And yeah, it's not the 33 billion Wiz acquisition, whatever. As we talked about before, the European ecosystem is that much more immature than the US, and these kind of $500 million exits are really, really big things. And Ireland, for the Irish tech ecosystem, it's a massive exit. So that money will flow back into funds, into founders, et cetera, et cetera. So all really, really good stuff.
It's legal tech as well. I mean, that's quite a tough space to play in.
As always, like boring stuff is good. This is not like legal tech in the sense of like Harvey AI. This is kind of relatively boring kind of software to in-house legal departments for practice matter management, etc.
Love boring. Bring on the boring.
Boring is great. It attracts fewer entrepreneurs and less competition and that kind of thing. So it's often overlooked, but it's not part of this sort of very hypey, let's replace lawyers with LLMs kind of game, which is potentially a thing, but I'm sure we'll see some blow ups there because it's probably too much optimism. So congrats to those guys. That's my deal of the week.
Boom. and welcome. Well on to the frontline team. Mads, what you're out about this week with the girls? What else is on your agenda?
The big private markets jamboree is taking place in Berlin. It's super venture and super return time. So the whole European world of private equity and venture capital are heading to Berlin. And while they do that, we are heading up to Cambridge to, instead of spending time talking to all the other investors, we're going to host 30 amazing startup teams there. And run a great one-day accelerator on Monday, which I very much look forward to.
That's cool. So actually, everyone on this call, we're all protesting with our feet and not going super venture. Whereas the whole industry, everyone in my WhatsApp groups is all going to Berlin. And we all know that it's a great place to catch up with people. It's not the best place to raise money, quite frankly.
Yes.
And so interesting. Yeah, no, I'm working. I'm doing some real work.
Well, I'm coming out of Lisbon, sort of that. Gents, what a gift, what a pleasure. I'll catch you next week.